So just to put in perspective, this last Samvat has been nothing but an extension of what has been happening from COVID bottoms. The index has moved up 150%. I think from where we were 7,500, and today we are at 18,600 or so as a high. So it's been an extension of that. We have been a spectacular market in the global context also. We have probably been among the best performing, if not the best performing market over this time phase. But what I really think is that it is, most people get surprised and shocked. There's like total awe as to what's happening. But the thing is that whenever we have studied that in the past, markets have crashed, like take 2000, we had an IT crash. Post that, markets always have this spring action, where markets get oversold on the way down. And post that, you have a spectacular vertical move. So 2000, the market fell 40%. That is the IT bubble when it burst. And in 2003 to 2004, the market went up 120% in 9 months. Right? Similarly, in 2008, we had a market that fell 60%. That's the financial market crisis. And from 2008 bottom to 2009, we were up 180%. So markets tend to, after crashes, have this kind of spring action. So what we are seeing is not something that's totally out of the box. But what we notice is that post these pullbacks or sharp pull-ups, or what I call a compressed spring action, markets need to consolidate. And I feel that going ahead, the action is not going to be so much in the index. Markets need to, when you run very fast, you need to catch your breath. If you don't catch your breath, you're sooner or later going to collapse. So I feel that the markets will sort of consolidate. They will need some time. You will have to have some time-wise correction. And I think this is also the time when you could see sector rotation, because sectors that have been in the fancy for the last few years have essentially been a very risk-off kind of play, have been very defensive in nature. But two things that have been happening. One is the way commodity prices have been going up. And second is also the expectation that India would see an economic revival. I find that there will be a churn that will happen in this phase of consolidation. So I think it's a very exciting time. Yes, your whole digital play is another exciting area. And every bull market throws up a new sector, new leadership. 2000, we had all these internet companies, and we had this whole hogwash of eyeballs. And companies were valued based on how many people went to your website. Of course, it ended badly. In 2008, we had this land bank thing, with real estate companies, and we know that even today, most of them got wiped out. And I guess with this new thing, just to extend from where Devina is, we'll come up with a new term, new thing, new valuation parameters. And one will have to be cautious, because there's no running away from earnings, which is the central theme. And one wonders how many of them will really go out and deliver the promises that they are on. So broadly, I think that we would head into a consolidation phase. We would see sectorial change, but this whole digital play will throw up some amazing leadership, but not everything is going to be a sweet spot. So one will have to be very, very careful of what we invest in.
Okay. Well, talking about earnings and valuations, Nilesh, given the way everything has been moving, we've seen a fair amount of rotation. We've also started to see broader participation. What really stands out now going forward? Where do you feel we'll continue to see a sustained trend and constant performance?
Well, I still expect most of the businesses to continue to kind of grow and do well. It's a different thing that maybe the current prices for several of these sectors, in a way, factors in their near-term growth prospects. But a few sectors which I think could potentially be outliers over maybe the next year or beyond. First, I clearly believe is that the real estate sector is in for better times. They've gone through the J curve, they've gone through all the tough times. A regulator came in, a lot of cleanup has happened, the weaker players have kind of fallen by the wayside, and we see some very handful of capital efficient players out there who have always believed in delivery and who have always believed in delivering a superior product to their customers. So clearly believe that real estate is probably on that same kind of a cusp of a similar kind of an uptrend. We saw this when markets rebounded sharply from the lows of 2008 to the highs of 2010. After that, essentially, is when property prices started to go up. I'm not quite sure to what extent property prices will go up, but demand is back. and clearly that's great news for some of these real estate developers. So I clearly believe that's one sector which probably looks good. The second spot which could essentially be a opportunity is essentially this whole PSU banking space. We don't yet own any PSU bank, but we're getting increasingly constructive on that. I mean, just before I stepped into this show, I saw Bank of India announce numbers, and they show basically a 2x growth in their profits for the quarter, which means that they now have a lot less provisioning to do. A lot of the pre-provisioning operating profits are flowing into the bottom line, and all of this essentially means elevated levels of ROE. And when you have higher ROE, that leads to better valuation. So I think we're at a stage in the market where we need to look not just for a much higher level of earnings growth, but where there's a potential for re-rating. I think that's basically the big opportunity. And I clearly believe that real estate as a pack and some of these state-owned banks is where there could essentially be both a superior earnings growth as well as a scope for re-rating. In addition to that, I also believe that this whole broadcasting space and the entire media space again could do very well over the next couple of years. Keep in mind that the economy is on a rebound. A lot of conventional sectors, be it automobiles, homes, education, are all going to start advertising in a big way. And that's good news for some of these broadcasters. In addition to that, the next couple of years is election times, which means you're going to see increased spending. So these are the three pockets which I believe have not run up quite significantly, and there could be even better days ahead for some of these sectors.